You're one of the guys who, I looked up to. You're one of those people that, came before me. And then, so I always, to this day, no matter what, I see guys like you, I shake your hand, and I thank you guys for, carrying it out of the wave to when I came in, and you see generations move forward now. And I don't see that out there as much, Donnie. And I'm curious, what do you see about the current marketplace and new traders coming in? And there's a lot of great ones, don't get me wrong. But what do you think maybe is something that, for the new traders out there that are just opening accounts in 5 minutes and coming to the screen and calling themselves futures traders, what are some things maybe you think they should do or can do to develop those things that we talked about?
They're not going to like the answer that I'm going to say, but the first answer I'm going to say is they need to do some more work, more research, and do some paper trading. Before I get into what I do now, I left the floor in 2000. That was more of a political decision. That was more of a, we're going electronic and they're going half ticks and quarter ticks. And my risk is the same, but my reward is not the same. And I was like, okay, if we're going fully electronic, I want to transition now. And I don't think people recognize what happened to seed prices between 94 and 98 and 2000, where they really plummeted. And then the euro dollars kind of locked into a really small range as the Fed started to play games with rates. That was really the first time the Fed started playing games with lower rates and lower yields. I mean, it was the beginning of this entire 24-year cycle that may or may not be coming to an end now. But volatility disappeared in the marketplace, at least in the Eurodollar stir contract market. And it was really, really difficult to meet a huge nut and be profitable. So I transitioned off the floor, but I went into mortgage backs. And I had to go through a learning curve there. I had to gain credibility in that market. And then, long story short, is I ended up with a huge portfolio of stuff from GE that we couldn't auction off into the great financial crisis. So I left the floor for safer opportunities and ended up walking into a freaking snake's den. And literally in early '07, mid '07, I'm like, we're screwed. Everything's screwed. The mortgage market's screwed. How bad's it going to get? Um, and I stuck it out and until the beginning of '08 when it all just went south. And then I was looking for another opportunity again, right? So I got a decent severance package. I got short the market. I still had money. I still had a trading account. I knew things were going to get bad. My friends didn't believe me when I told them how bad things were going to get. I ended up literally out of work with GE with a severance package, and I opened up my screens at my house for the very first real time. Like I had dabbled, I had an account, I played games, I did stuff. But now I'm focused on day-to-day day trading. And I got literally destroyed. Literally absolutely destroyed. 6,000 or six-figure donations, losing money, doubting myself. Everyone's been there, everyone's done that, that survived long enough to do this. And I was like, wow, I don't even know what to do. So to get back to the question that started that little diatribe, what I realized was is all of the skills that I had learned on the floor, the emotional intelligence, the sensing and the feeling and the sensory information and input from the marketplace based on the conversations that you would have with brokers, with guys on desks, you had a relatively good idea of what was real and what was bullshit, right? You had a relatively good idea that that guy, Paul Tudor Jones, just did X and he's a pretty good trader. And that idiot over at Nomura has no idea. And I don't know why he took the other side of that trade. And so you're now like, okay, that changes my entire perspective on the market. I know that Tudor Jones wants to do X. I can see Witter's right behind him. I can see Plaza's doing the same thing. And there's a correlation in the S&P, or there's a correlation in the SPOOs, or in the Eurodollars. I have a relatively good macro example of what's going on. Then you get on a screen in your house, in your pajamas, And you're like, fuck, I don't have any stimulus. I've got no knowledge. I've got no data. I've got no information. And now I want to trade price like I know how to trade price. Because I traded price because I knew where the levels were, and I knew where the volume was, and I knew where the interest was. So I knew the picture on the floor because it was in front of you. And now I'm looking at a screen and I'm like, it should hold here. There's a double bottom. And then boom, you're like, oh my God. And then I'd be like, well, do I buy more? No, don't buy more. And you're like, well, do I stop? I don't want to stop out. So I had absolutely no idea how to trade a fucking screen. And I'm like, okay, what do I need to do? And so my advice to new traders is find a system that works for you and keep it as simple as possible. And by that, I mean, identify some price levels that work for you. Identify a market that fits your personality type. Are you type A? Are you a quant? Are you a math guy? Or are you a cowboy? Find a market that fits your style. Learn as much about it as you can and keep it as simple as possible.